Hey guys, I am Debbie Bird with Briggs Freeman Sotheby's International Realty, which I think you all know. And today we are here with my friend Mike McCoy, and we are going to talk a little bit about appraisals. So, Mike, why don't you introduce yourself?
Sure. Mike McCoy, producing manager here at Affiliated Bank Mortgage here in Fort Worth. Been writing loans for almost 20 years now. And I think today our big topic and a hot topic in the market right now is appraisals and the contracts that go along with those, which is all new to us, right, Debbie?
Yep. Yeah, it's been a little bit different this year. So, well, let's jump right into questions. We've got 4 questions that we want to cover, and I think it'll go pretty quick. But first of all, what is an appraisal, and do I have to have one?
Okay, cool. So the simple answer on a purchase loan, on a conventional loan, there are times when appraisals are not required. But definitely what an appraisal is so you have 2 parts to a loan. You've got the credit piece, which is your income, assets, employment, all those kind of things. And the other part is the collateral review, or the fancy name is appraisal, right? So we hire our appraiser panel to basically review the comps. They look at condition of the property and make sure the property's worth what you're paying for it, effectively, is what it is.
Okay. So who is exempt from an appraisal and who can waive it? Because in some cases, people can waive an appraisal. Right.
Great question. So So on government insured loans, so like FHA and VA loans, on a purchase, 100% of the time, there's going to be an appraisal requirement, okay, all the time. Conventional loans, which are insured by Fannie Mae, or for ours, the conventional loans are insured by Fannie Mae. There are times when a buyer is given the option to waive that appraisal. An example of that might be a large down payment, lots of assets in the bank, high credit scores, or a combination of all of those things. So if you're doing minimum down payment, typically you need to prepare for an appraisal, 3 to 5 to 10% down. That's typically going to require an appraisal.
Okay. So what happens if it doesn't meet appraisal?
Yeah. So a lot of times, folks think, and a lot of our clients, both of our mutual clients, think that, if the home doesn't appraise, then we just kind of lower all of our basis for our down payment and all that. Well, what happens, you really have 3 options when an appraisal doesn't meet the contract price. Number 1, you're likely going to look to amend the price to lower to meet your appraised value. Okay, so if you're under contract at $300,000 and the appraisal comes in at $290,000, typically the first step in that is to lower the $300 contract price down to $290. Okay. Number 2, you're going to elect to either just negotiate with the seller, where either you meet halfway, you pay all of it, the delta, the $10,000, because the seller is still anticipating on getting their $300,000 regardless of where the appraisal came in, right? Or number 3, which you can terminate and walk. Okay, at that point, it typically doesn't get that far, but that is certainly your prerogative, as long as you're within the parameters of the contract in doing so, which is for another video. But effectively, you do have that option.
Okay. All right. So right now in our current market, most of the winning bids are putting in an addendum to waive the right to terminate based on appraisal value. We have had to write it into any contract that we don't have to. That's the winning one always has that. So say we have a house that is listed at $420. We have put in an offer for $450. And then the appraisal value comes in at $420. So now we've got a $30,000 difference, and we'd plan to put down 20%, but now we've got an extra $30,000 we've got to come up with. So, tell me what happens here. Like, what do we do?
Yeah. So this unfortunately comes up. So number one, just out of the gate on this, provided that the buyer still or borrower still qualifies for putting less down, that's going to be the quick pivot. So remember, to recap what I just explained in the previous question, is the seller still expecting the 450 number, right? So that's what they're still expecting. So what you guys have done or potentially done, the buyer has agreed to pay the difference if the appraisal comes in lower. In this case was 420. So remember, we still have that $30,000 that the seller is expecting to have. So in that scenario, what would happen on a traditional route is the buyer borrower is going to pay the $30,000 difference, and then their loan to value or their down payment requirement is going to be set off the lower of the two at 420,000, which would be, if they're putting 20% down, would be 84,000. Let's assume they have $6,000 in cost plus their 30,000. So they're at $120,000. Assuming they don't have that, or they don't want to exhaust all of those funds, we can now diminish their down payment to maybe 10%. So now they're bringing $42,000 plus 6 plus 30 for the delta and the contract and the appraised value. So that's a big misnomer and a really good question, because a lot of times sometimes you're just like, uh-oh, I didn't know that I had to do that, or I'm not prepared to do that because I need to put money into the house once I buy it, and I'm kind of limited on funds. So we can always, provided that they do qualify, we can just reduce their down payment.
Okay. So they don't have to come up with that 120,000 necessarily,
right?
In this case, because we can adjust the down payment just a little bit if we have to.
That's right.
If they meet if they qualify.
That's right.
Okay. Well, thank you so much. I know that was super quick, guys. If you have more questions or more in-depth or more specific questions to your circumstance, you're always welcome to call me or call Mike. I will post his information below. You can always comment or DM or whatever. We'll figure out a way to answer your questions. So thanks so much for joining us. Thank you so much, Mike. And we'll see y'all soon. Bye-bye.
Thank you, Debbie. You're a rock star. Take care.
Bye.